Welcome back, everybody. It is now my pleasure to introduce Nick George, Executive Chairman of Bowen Coking Coal. Nick is the founding Managing Director of Stanmore Coal. He served on Stanmore's board from its formation in June 2008 through to 2016 and has over 20 years' experience in investment banking, civil engineering, corporate finance and project management. In his prior roles in investment banking, Nick has been involved in leading advisory mandates with corporate, government and private equity clients across industry sectors ranging from resources to infrastructure. Please welcome Nick George, Executive Chairman of Bowen Coking Coal, to the stage. Welcome, Nick.
Thanks, Nicola. Can you hear me okay?
I can hear you fine.
Perfect. All right, so I'll just share my screen.
You go to presentation mode, Mick. I can see your screen. Thank you. Perfect.
Okay. All right. Thanks, Nicola. And look, thanks everybody for attending. Thanks to Kieran as well for pulling together this Connecting Coal Conference. What a fabulous event. I'm very pleased to be here today to take you through a little bit of the Bowen Coking Coal story and a bit of an update. It's been a busy period for us and we're heading into production as we look to become the next significant independent met coal producer in Queensland. So we have a very clear target now, and in fact this is probably as of this morning slightly out of date, but targeting 5 million tonnes of ROM. We'll get better than that by 2024 with the recent acquisition of the Bluff mine as well. So look, I'll take you through a little bit more detail. It's a reasonably high level presentation, but I think we can have questions at the end and there's an opportunity to chat in the booth thereafter. So our very clear target is to get into production early next year. We're on track to do that in two of our projects, and I'll talk through that in a little bit more detail. Once we get there to 5 million tonnes or more, that'll put us in the top 10 Australian metallurgical coal producers, which is a great spot to be and some great company there. I'm pleased to note that Stanmore, another company I've had a lot to do with in the past, has recently announced they've just acquired the BMC asset, so they'll be leaping into a much bigger stage there and doing about 12 million tonnes a year, which is fantastic. So we've done three recent or fairly recent acquisitions. We've built this business, I think, from the ground up, and we're looking to continue to do that. But to date, I want to talk primarily about these three recent acquisitions, which have sort of propelled us into that 5 million plus tonne a year type mode. So we've also done a couple of infrastructure deals that I'll talk about as well, which get us going very quickly. And then as of this morning, we've just come out with another announcement saying we've just raised $11 million in equity, $15 million in debt. Add that to the money we had in the bank, we'll have over $40 million to get started and get our Bluff and our Broadmeadow East projects into production. Investment highlights. I know this is not strictly an investment conference, but I can't help myself. We've got very high quality reserves. Bowen Basin, probably the best export. Well, it is the premier export basin for met coal in the world. We support the steel industry. They're our clients. I think I paused here to say that we're very strong and patriotic sort of supporters of Queensland and of the Bowen Basin. I think everyone on this call would understand that without the met coal that we're producing in Queensland and exporting, you wouldn't be able to do any sort of energy transition or undertake a build out of renewables and transmission lines and everything else. So very pleased to be part of that mix and increasingly looking to be increasingly more of that export story. We've got a clear pathway to production with some infrastructure sharing arrangements to start with, but now that we've acquiring Burton, we'll have our own infrastructure, which is really critical. And demand is strong, so we'll talk about that in a little bit. But obviously, with a lack of investment and general pressures on the coal industry, we're starting to reap that now in terms of higher coal prices. We've got 4 operational assets will get going in the next 12 months, which will take us to over 5 million tonnes and 10 years of mine life. We've got a management team with extensive coal experience, strong commitment to sustainability, and really working in the local areas and stimulating the economy and providing jobs in local communities that we work in. As a company, we've got a track record of equity support, and that's sort of demonstrated in the capital raising we just announced today. And now we're funded, as I say, for our first 2 projects, which will get us into cash flow and make it much easier, frankly, in current coal price environment to get all of our projects going. In terms of our assets, we'll start in the north. So we've sort of pulled together what we now refer to as the Burton Complex. So we're acquiring Burton and Lenton, 90% of those from New Hope. This is a deal we've been working on for probably getting close to 2.5 years now, and announced it this year. It comes with all the infrastructure we need to get started, 2 twin module, a wash plant, train loadout. It comes with water dam, comes with camp for accommodation, offices, workshops, a haul road, etc. Lenton is an expansion project, which comes as part of that as well, which we're also acquiring from New Hope. We're working through the final federal approvals on that, and that will feed in a couple of years' time into our project pipeline. Broadmeadow East is an asset we bought about 18 months ago from Peabody. That used to be part of the same complex, and we've sort of threaded that back together now. So we've got the one Burton complex and quite a bit of coal, very high quality met coal. Hillelong is the other project which will feed through that infrastructure. It's one we picked up from Rio and another party. We've been drilling that up. We've now got 87 million tonnes of resource. This is a bit of a sleeping giant for us. We've struck 9 metres of very good coking coal within 30 metres of the surface in the south of that deposit, and we're funded by Sumitomo. They're earning their way up to 20%, but that's quite exciting because that'll feed through and utilise that infrastructure that we're picking up as part of this Burton Lenton deal. So that's sort of our Burton complex, which will all head out the Goonyella line out to DBCT. The other project we've got up there is Isaac River, which we picked up probably 3 years ago now. That's a small project. It'll go for 3 or 4 years, I should say, and do sort of around 500,000 tonnes of ROM a year. We're very close to our approvals on that and looking to get that going next year as well. A very sweet coking coal product we get out of that. Again, that's out of DBCT. If we look to the south, we've got Bluff, which we've acquired now, or acquiring from Macca. That's 1 million tonnes a year or so of ROM, very high quality, low vol PCI coal. Goes out the Blackwater line to Gladstone. And Karura is a very large underground project, large resource, very high quality, very low ash, and that's down the track a little bit once we get these ones going, and we're in a position to fund that capex. So this, I think we haven't. We've sort of put the pieces of this puzzle out individually, but we haven't to date sort of shown this chart. But this is quite exciting to me. So next year we'll be doing about 2 million tonnes out of these assets. You can see the Broadmeadow East, Burton, Lenton in the 2 shades of blue. So that's sort of our Burton complex, which is really the main mine we're building here. But sitting on top of that and adding a lot in terms of additional met coal is the Bluff mine and the Isaac River mine as well. So as I say, we'll reach our 5 million tonne target. This sees us get to nearly 7 by 2026. And look, we're not going to stop there. It's very important we execute these projects well, but I think as opportunities continue to arise and some of the bigger guys continue to consider their position in the basin, we're very willing to pick up more assets where we can. So at a high level, in terms of our project pipeline, sort of exploration is Karura and Hillelong, which will transition through some studies over the next couple of years, the Hillelong one. Assets under care and maintenance or in development, the Burton Lenton mines and Broadmeadow East, which form our Burton complex, and then very close to production now, Bluff and Isaac River. So I think in 6 months' time, this will chart. You'll see a couple of these will have kind of graduated into production. So a little bit more detail. We're targeting first coal well within 6 months. In fact, we're targeting first coal out of Bluff around February for first quarter next year. We've got a contractor on site, or going on site now to do some of the early works, and we're running a process for our longer term contractor at the moment. So that's Bluff. For Broadmeadow East, where that's equally just going through its final approvals in terms of it's got a granted mining lease, but we're just getting an amendment to the EA. So that'll come through early next year as well, and we'll pull the trigger on that and look to get that going as our first pit in the Burton complex. Burton itself, once we complete the transaction first quarter next year, we'll look to get straight in and start refurbishing the wash plant. So there's a bit of work in that. We've got to spend a little bit of money on that, tidy things up, get them back into sort of serviceable condition. But that'll unplug basically the full sort of Burton remaining pits which are unmined, and then the Lenton ones will follow on from that. Just briefly on coal prices, I think everyone's aware that we've had a very good run in recent times. We're now in record territory for hard coking coal and all other forms of coal really. So PCI is what we're mining at Bluff. That's sitting around that sort of 240, 250 US mark. I think hard coke's still 400 US a ton or over, which is a very, very strong price. And I think the next slide there, the next chart on the right-hand side, just talks to what's happened to steel prices. So steel prices are almost at record highs. That's an index, so they're not dollars on the left-hand side of that chart, which affords you the ability, and the steelmakers the ability to pay more for the raw ingredients. Obviously, iron ore has come off a bit. I'm very gracious of the iron ore guys to leave us a bit more headroom. But yeah, we're certainly enjoying and looking to. I guess the key point for us is get these things into production as quickly as we can and bank some of this cash while the prices are where they are. We do expect they'll remain strong for quite a long period, given the lack of supply and more demand coming on. You're seeing the Americans spending $1 trillion in infrastructure spend. The Chinese don't have too many options to keep themselves going other than just infrastructure pump priming. So we're very bullish about the supply, the demand side, I should say, and that supply side just really isn't there. It's tough. So a little bit more detail on the operations. So Burton as a complex, we struck a deal recently with Fitzroy, who have Carbon down, so we'll be using up to 1 million tonnes of their wash plant capacity, and in return we'll give them access to our camp and other things they need to get one of their projects going. So that gets us an early start in Broadmeadow East and the Burton complex. From sort of first quarter next year, we can get stuck into that. Beyond that, we will, as I say, by sort of second half of next year, we should have our first module of the wash plant refurbished, the Burton wash plant. Total capacity 5.5 million tonnes. We'll do about half of that initially in one module, and then look to ramp that up. Longer term, 1 million tonnes of that port we're getting from Fitzroy as a permanent assignment, so we'll have that, and we're just building on that at the moment in the market, looking to get more access through DBCT, which we will do. And then that sort of threads together. I'll talk about this a little bit later, but we've got a joint venture with Matt Lattimore and M Resources for the sales and marketing, which is really exciting. I think we can create a lot of value out of that as well. So Bluff, we are using the Cook Colliery. That's where they were washing it previously. That's where we've struck a deal with those guys to wash that with Q Coal. So they've got capacity we've got capacity there, 1.2 million tonnes a year through that. Rail and port, we've got we're going out of Gladstone. We've got that sorted as well. So again, it'll be marketed through our joint venture with M Resources. Just briefly on who we are. My background, you heard, founder of Stanmore Coal and a few other things. Gerhard is ex-Exxaro, where he came out from South Africa to try and find some assets in the Bowen Basin. And when they sort of didn't kick on with it, he acquired some of those assets himself and founded this company. And I joined him about 3 years ago. Matt Lattimore is speaking in this conference. Some of you know he's built M Resources from scratch, M Mining. He's a fantastic colleague and friend, and he's doing a great job with the Millennium startup as well. So very excited to have Matt involved and his expertise in the marketing, which is first class. Neville Snedden was the chairman of Stanmore Coal when we started that. Original when I left, and was also the former CEO of Anglo Coal and chairman of Dalrymple Bay, so very experienced. Outside of this, we've got Mike McKee, our Chief Operating Officer, some of you may know. Peter Westerhouse is working with us as well on getting Burton started, that's the main operating guys in the business. A little bit more on the marketing. I won't dwell on this except to say that this is quite exciting for us. I think when I ran Stanmore, the marketing we didn't do that. We sort of gave that away as part of the financing. The opportunity to get involved in this and get involved in some blending and sort of the value add there is quite a good one for us. The other thing I'd say here is that we are getting very strong interest. So obviously the coal market is tight. We've got good relationships into Korea and Taiwan and Japan and other places, and Matt's certainly got first-class relationships all around the world with all the steel makers. So we are getting very strong interest in this. I think we'll get good pricing on it, and we won't have any trouble selling any of this coal. So I guess in summary, we've got some great projects close to infrastructure. We've now threaded together sort of the jigsaw puzzle where we had Broadmeadow East. We're now putting together the Burton pits, the Lenton pits. Hillelong will feed into that, and that becomes a complex, but importantly with the infrastructure. That infrastructure is worth about $300 million replacement cost, or probably more. So that's a great leg up for us to say now we're in charge of our own destiny in the North Bowen Basin. We've got great resources. 50% of our resources are measured and indicated category, and we've got the first two projects funded now, and we're away. Strong market fundamentals. As I say, the steel market's very strong. Met coal market on the back of that is extremely positive. Good people. I think, as I said in the earlier slide, perhaps I neglected to mention, but I think between us we've opened over 11 mines and run 25 mines, coal mines around the world, mostly in this part of the world. So very experienced at taking companies from exploration to production and starting up mines safely and successfully and profitably. We've got some great partners as well. We've got Sumitomo funding us into Hillelong, as I mentioned, and Formosa, who are the incumbent 10% holder of the Lenton joint venture, and they're keen to stick around and very excited about getting this into production as well. And a clear strategy to become a big player. So we're sort of partway down that road. This is a great set of assets and a great start for us, but we hope to do a fair bit more. Thank you.
Thank you so much. We do have some questions from the delegation. And firstly, I'd like to ask you what environmental pressures you have impacting you at the moment. Media always talks to just coal, plural, not the need for steel-making coal. How do you handle that as a business?
Yeah, that's a great question. We spend a lot of time thinking about this and trying to message it, and sometimes you feel like you're in an echo chamber, not getting very far. But I think your point's well raised. Look, let me start by saying, in an environmental sense, we have the highest standards and we support the highest level of regulation. I think there's no point, as Australians and Queenslanders, doing anything else. We need to be world leading in terms of what we do. That's practical on the ground. That's things like rehabilitation. So when I ran Stanmore, we caught up the rehabilitation that wasn't done under the previous ownership. We'll do the same thing here. We're committing to spend $25 million in rehab over the first 5 years at Burton. So that's kind of critical to us. But the broader sort of, if you want to coin a phrase, ESG pressure or climate pressure, I guess. We're very clear in what we do. That we're feeding the steel industry. You can't have an energy transition. You can't have renewables without steel, and you can't have steel without coking coal. Certainly not in the quantities that are going to be required. So, we sleep well at night. We're very comfortable with that. We're very proud of what we do. We're proud of the Queenslanders that work in the coal industry. And I think, look, the other thing I'd say is that increasingly see, I think, newer players coming through who are willing to say that, willing to actually kind of stand up for the industry because it's doing a fabulous job. And put aside all of what I've just said, the $3.5–4 billion worth of royalties and then a whole whack of federal taxes on top of that, there's not a lot of hospitals, schools, teachers, police, all that sort of stuff without that money. And this year, prices where they are, who knows what that could be? It could be $7 or $8 billion contributing from state royalties, from the Queensland met coal sector. 82% of our exports out of Queensland last year by value were metallurgical coal, of our coal exports. So that's not to denigrate thermal in any way, but just to say that we've got a great story to tell here. And that's one of the points I'm trying to make internally to the industry is saying, let's get out there and tell it, get on the front foot.
100% agree, and I've got a fairly extensive background in coal myself, and you tend to be seen as the big bad beast against the environment, and I think very few people actually appreciate the true beauty of industry and what it actually does for our nation's economy.
Yes, absolutely.
Do you have an appointed EPC company for the conveyor requirements as yet?
No. So I guess you will have gathered that we a lot of our focus is on using existing infrastructure and refurbishing other existing infrastructure rather than building new where we can. And so, the biggest area where we're going to be doing some work on conveyors and the like is going to be at the Burton mine. I would just encourage people to get in touch with us there. We've got, as I said, Peter Westerhouse is driving that process, and then Mike McKee is our Chief Operating Officer. So I'm happy to give out their details and people can get in touch.
Fantastic. And given that you like to use your existing infrastructure, I'm imagining that you like to develop very strong relationships with your supply chain. Do you like to move to that preferred contractor model?
Yeah, look, it's horses for courses, but that's sort of what we've done to date. We've kind of worked with people that we know and we trust, and that builds up over time. But we're always open to new suppliers, and certainly going to new projects. We're very open to that. So, I think we just like to work with good local contractors and good local suppliers. That's sort of our mantra, if you like. Yeah.
And what do you think is going to be the next big challenge for the business? What's the next big announcement coming?
Yeah, well, we've had a flurry, so we kind of pause for breath a little bit. I think, I need to stress that we need to execute these projects, safely, efficiently, profitably. That's the next big focus, and we'll do that. We've got the people to do that. But, we've got our eye on a few other things. So I think, there'll be more to do. It may not be straight away. There's a few things we can do. I think it does get harder to keep buying assets when the coal price hits $400 US. Because expectations change. I prefer not to pay too much for assets. There is that. But no, look, we're always active, and we've got some good things that we'll do. So I think now that we're at scale, or we'll get to scale, we've got a meaningful. I think we were a $10 million company when I joined, and now we're sort of 220 or 240 or something like that. So we've got some scale, we've got some substance, we'll be producing some coal. Still very cheap, I might add, at that price. But I think we can do a few more things from here.
Excellent. And are you aware of exactly what opportunities might be available on the table now for the delegation that do represent certain specific contractors in the supply chain?
Look, there'll be a whole host of opportunities coming through, particularly around the Burton rehab. We contract mining for all our operations is most likely way we'll go. So, there'll be. It's mainly sort of refurb type stuff, in terms of existing infrastructure, train loadouts, CHPP, conveyors, all of that stuff. So there'll certainly be some work in all that for sure.
Excellent. Thank you so much, Nick. I'll ask you to head to your booth now.
Okay.
Anybody who has any questions for Nick or would like to explore some of those opportunities and talk all things for Bowen Coking Coal, please head to the Bowen Coking Coal booth and speak to Nick directly. Thank you so much, Nick, for joining us today.
Thanks, Nick.
Now we're going to take you to a speaker presentation from one of our sponsors, Apricity Finance. Apricity Finance provides a simple short funding solution aimed at relieving growth pains experienced by many Australian and New Zealand businesses. They specialise in single project known as invoice finance and offer solutions for approved businesses to their invoices and to their high-quality credit customers paid faster to reduce your cash flow stress. I'd now like to welcome Lyndon Toll, CEO of Apricity Finance, to the stage. Welcome, Lyndon.
Thanks, Nicola, and thank you to Connecting Coal for the opportunity to present today. My name is Lyndon Toll, and I'm the CEO and co-founder of Apricity Finance, a specialist invoice finance provider. We all know Australia is a global leader of coal exports on the international stage. As we slowly emerge from the global pandemic and restrictions ease, the fact that the coal industry provides more than 32,000 full-time jobs directly and indirectly supports an estimated 270,000 additional jobs cannot be underestimated. In fact, the very reason Australia comes out of hibernation with a positive tone can largely be attributed to the mining sector and coal in particular. With the Bowen Basin containing the largest coal reserves in Australia and the fact we have several mining clients, I felt today was a great opportunity to explain what we do and how we help SMEs in the space experience success. Whilst the opportunities are enormous, they also come with plenty of challenges. Whether it be business models based on short-term work and contracts resulting in peaks and lulls in productivity, or tenders for major projects with the fear of inadequate funding, we seek to eliminate cash flow stress and deliver peace of mind. Firstly, a little bit about why I started Apricity and then our sector. In 2013, I saw an opportunity to work with highly successful operators servicing the biggest companies in Australia, the likes of Woolworths, BHP and Lendlease, that have the size and strength to dictate trading terms that are often extremely difficult for SMEs. We all know that they'll pay the bill, but when is the question? It's difficult enough to win a tender, but then you have to pay wages and super, service machinery, buy uniforms, worry about workers' compliance and safety, and then ensure that your VAS is done each month. But now you also need to contend with doing all this when not being paid for up to 90 days after you submit an invoice. Apricity was created to fill that gap and to provide a flexible facility that you control in times of growth. With the major banks continuing to promise and simultaneously under-deliver, the non-major bank sector has quietly matured in scale, quality and diversity. Post the Banking Royal Commission, the major bank sector has seen considerable loss of quality bankers to the non-bank sector, both as founders and operators. The important thing to note is that we as a sector are not doing anything vastly different to the old days, just faster and with the client in mind rather than shareholders. This rings very true with the current situation of banks being forced out of dealing with various sectors. Old-fashioned banking, where the customer comes first, has returned. I'd like to tell you one quick story about a long-term client of ours, a mining services business based in the Hunter Valley. Significant coal prices decline from late 2011 saw this business go from over 70 staff to only 5 by 2015. Obviously, the owners were devastated by this, but realised the opportunity once stronger prices returned. They hadn't lost business because of their work, rather the sector had effectively gone into hibernation, much like at the moment. So they decided to work on the business and how to succeed moving forward. They knew they could be successful at winning business, but based upon the past few years, the banks told them the usual story. Once you've fixed your balance sheet and you have money in the bank, we might help. Fortunately, they'd received one of our newsletters and decided to try and understand what we could offer. They often remind me of the story of sitting around the boardroom table, all 5 of them, trying to pull our product to pieces. But they couldn't, and even rang to ask, where's the catch? There isn't one. We are transparent from day one. They signed up with Apricity and started realising the benefits of confidently submitting tenders, knowing that we were behind them. Not only did they see incredible growth rates quickly, but they were able to employ over 200 people by the end of 2017. We're passionate about ensuring SMEs have the confidence to take on big projects, employ more staff, or invest in new equipment. As I highlighted earlier, Apricity was created to help support the specific growth needs of SMEs who supply goods or services to large business organisations or government. We finance up to 95% of approved invoices. Our product is really simple. Please take a look at the video we're about to show you now, which shows a really simple version of what it is we do. We help businesses access the capital owed to them sooner, reducing frustrating wait times and providing cash flow certainty. By doing this, we've helped many businesses take advantage of growth opportunities without burdening themselves with additional debt. Importantly, the non-bank sector has a greater ability to see value in the balance sheet and not look to burden operators with security requirements such as the family home. But it's also not just about the money, it's about the people. Building strong relationships with our clients is the cornerstone of our business. Our clients have access to the decision makers as well as dedicated relationship managers. In many instances, like the mining services company in the Hunter Valley, our clients have become our friends. We cherish these relationships. Again, many thanks for the opportunity to discuss electricity in this sector. We're here to support the coal sector, and we have no stakeholders other than ourselves to decide this.